Hi, I'm John Fitzgerald and welcome to the end of 2009. I should say the end of a decade. Isn't it incredible to think back 10 years, what we were doing 10 years ago, 1999, we were celebrating the change of a century, and that's amazing to think that's 10 years ago from now. And what have the Reserve Bank done? They've given us an early Christmas present by increasing the cash rate by 1/4%. None of us should be surprised about that. The cash rate at 3.75 is really too low. And I've said it before, it really needs to go up to around about 5, maybe even 5.5%, which means the borrowing rate would be somewhere between that 6 to 7%, maybe 7.5%. Remember, the average over a 10-year period should be around 6.5 to 6.7%. And let me put that into some perspective for you, because it's really important that we do that as wealth builders. As wealth builders, we must take a long-term view. And I often get people say to me, John, I'm worried about interest rates, I'm worried about this, I'm worried about that. Get used to it. Over a 10-year period, the interest rate's likely to move 30, 40, maybe even 50 times. So you can't get worried about that. It's the Reserve Bank fine-tuning. And all we can hope for is that they keep it within that band, that affordable band. Remember, wages are going up, continuing to go up. And when we were doing these 10 years ago, the median wage, let me just go back 10 years, 1999, we were selling custodian houses, that is investment properties, in places like Morningside in Brisbane for $160,000, Wynnum, 12 kilometres from Brisbane for $160,000, etc., etc. At the time, I tried to keep the benchmark under $200,000 because the median house price at that time, around 99-2000, was around $200,000. And just like today, I was trying to be under that benchmark. Had a lot of people write to me saying, John, can't see the median going beyond $200,000. They were giving me all the stuff about affordability, about interest rates, and about the crisis of the day, which was, we went through the Asian meltdown in 99, then 2000 we went through the Y2K bug, and then 2001 we had the 9/11 scare, which, they said the world will never be the same again. Let me put it into perspective. Those houses we were selling for $150,000 to $200,000 back in 99-2000, when the median house price was $200,000, all doubled in value, or just close to it, between 2000 and 2004. And that was the cycle of the market. The median house price in 2000, as I said, was around $200,000. By 2003, 2004, got up to $380,000, nearly doubled in that 4-year period. And that's the cycle. When we talk about a cycle of a market, it goes up, it bumps along, and then goes up again. It's been bumping along. And why that's important, I think 2010, I can feel, is the start of the cycle actually commencing. It even started in 2009, and remember we had the financial crisis starting, mid-2008, going through to mid-2009, and now they were saying we're coming out of that. Still, we saw the median house price dip down a little bit, but then go back up again, and has actually clawed back. Now we're reading they expect house prices to grow in value, somewhere between 5-10% in 2010, but it's never a growth. If people are talking about the growth, it's never a controlled growth. We could see between now and 2014, and what I'm anticipating, similar to 2000 to 2004, that median house price to grow exponentially in the next 3-4 years because of its performance over the last 6 or 7 years. And we can afford to actually have this happen. We've got low interest rates, and wages have continued to grow in value. Those houses that we were talking about 10 years ago for $200,000 are now all worth over $400,000. And the houses Custodian have been promoting in 2008, 2009, we've tried to keep Melbourne and Brisbane under $400,000 or within that particular range. And that's been real important to us. The journey of wealth building, what is it about? It's only about one thing. You building a portfolio of properties to get compound growth. That's what it is. You building a portfolio of properties to get compound growth. When I'm looking at an asset, the only litmus test I give it, and the most important litmus test I give that asset, Can I use this property to get compound growth? That's a litmus test. It's not the prettiest property. It's not in the best location. It's not a place I may not even live in or want to live in. But it's perfect for compound growth. And why is it perfect for compound growth? I've got the land content, which is going to give me growth. I've got the leverage ability. Now, leverage ability means that the bank's regarded as a good security for loans. Good security for loans, why is it that? Because in the houses we buy, houses under $500,000, 92% of them are owned by owner-occupiers. There's a good resale value. So banks will loan up to 90% of that product. Completely different to commercial property, high-rise units, farms, various other asset classes in property, where they might only lend 50%, 60% or even 70%. Me being able to borrow 80 or 90% gives me that higher leverage, the ability to compound growth. And that's really the key. If I'm buying an asset, how can I use it to get compound growth? There's going to be bumps along the way, but I want to smooth those bumps as much as I possibly can. But from my coaching perspective, whilst I'll smooth the bumps, I'm going to tell you, yes, there are bumps along the way. And over the last 10 years, each year we've had a crisis, a bad news, 9/11, affordability, Asian meltdown, global financial crisis, various things that has changed people's directions off property into various other areas, told people, wait, don't buy now, you should wait and see, wait and see, wait and see. That's a discipline, or I should say a trap I never fall into. The success formula, positive, responsible, proactive, always staying in momentum. Always staying in momentum is so important. And that's really the key. To get compound growth, we must be in momentum. Buying assets in momentum. Between now and 2014, the decisions you make now, you're going to see significant growth between now and 2014. And the decisions you make now, starting this next decade, start with that in mind. How can I get myself into a position where I have a portfolio giving me good compound growth? I'm going to talk more about that at our Kickstart events. And our Kickstart events are something that we've never done before in the format that we're doing in January 2010. I'm going to do a goal session in each of the states en masse with the clients. But I'm going to speak a lot about right brain techniques. I'm going to put the left brain in, and I'm going to introduce you to a goal book, the redesigned goal book, really focusing on how I can get you to project that initiating contact to ensure that you're always on focus with your goals. So put it in your diary, try and come along to one of the Kickstart events in any of the capital cities in late January, early February, and let's kickstart not only 2010, but let's kickstart ourselves into this next run in the property market right through to 2015. Custodians, have a very fantastic Christmas. Take a break, take a breather, and certainly look forward to seeing you in the new year. I'm looking forward to a fantastic new decade working with you as we've done over the last 10, 12 plus years. Thank you for listening to me.